Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 10th of July and our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, coming to us out of Singapore. Vishnu, as always, great to have you on the Monday.
Thank you, Brian. And as always, it's really good to be starting the week with you.
Now, Vishnu, for a start, we've got to look at Friday's non-farm payroll numbers. So the 209,000 jobs were added in June. It is the smallest increase since December 2020. However, labor force participation has gone up. What are investors reading into the numbers?
I think investors didn't spend too much time reading. They were busy selling. So they were selling the dollar. And then, but for good measure, they were sort of cautious. They also trimmed their long position in equity. So basically, the risk assets. Along with the dollar, they also bought front end yields. That's to say, they made the front end yields, the 2-year yields, go lower because the 2-year yields are more closely correlated to where they see policy rates going. So they have conflated a softer than expected read in an FP with a less hawkish Fed. Hence, they sent the 2-year yields a little lower, but 10-year yields were somewhat higher because of higher oil prices. So it's a really mixed market. Non-farm is, however, and here's the real crunch of the matter, is a non-event for the FOMC that's coming up at the end of the month because it doesn't make the Fed any less hawkish for one of the reasons that you pointed out. Participation rates are up. Alongside that, the wage pressures remain robust. That's to say the Fed is not going to let up on its overall narrative that you've got a hot labor market, you've got a uncomfortably sticky inflation. And so that 25 basis point hike in July is pretty much done deal. What's more, September could remain live. So I think overselling some positions on the NFP might prove a bit premature.
Okay, so numbers were pretty decent in the US, not so decent in China. So this mirrors our show last Monday, where China numbers came in weaker than expected. So China's inflation data has just come in this morning. Producer prices sank 5.4%, and this was weaker than a Reuters poll, which expected a 5% decline. Consumer price inflation was also flat, weaker than expectations for a compared to a 0.2% rise by a Reuters poll. Now, again, this is a recurring theme, Vishnu. How are Asian markets reacting to this?
I think Asian markets are perhaps going to be fence sitting a little bit on this one, deciding whether it is half full or half empty, but not even really sure what's in the glass and what they're drinking. So here's the point. To what you said earlier, yes, it is weaker, and on a weekly basis, that must be worrying because it does reflect the underlying weakness in the demand recovery. So there's a lack of confidence. This chronic confidence deficit means that it'll continue to struggle. The reason why investors might look at it both ways is because increasingly and quite perversely, the weaker and more chronically weak data come in, the more investors are betting that China must unleash a big stimulus. So they're just waiting for that pop of that stimulus to come through. And really just waiting for the next high. So depending on what your positioning or your view on the market is, it could either be this is worth waiting and betting on a stimulus that could give at least a short-lived boost because that's all you're looking for, or whether you're looking at the fundamentals and saying, look, is there going to be a durable demand recovery that spills over into positive economic activity for the rest of Asia? And then your answer may be a bit more downbeat.
Now, final question with the start of the week, Vishnu, what are some key events and data points that we should be looking at that's coming out this week that will move markets?
Well, it was a very eventful weekend to start with Yellen in Beijing, but it's a non-event because at the end of the day, despite the fact that there are relief measures there because you did see good conversations, candid conversations, you also had Yellen saying they're on surer footing, but one suspects it's still the wrong footing that they're on. And so the terms of engagement are still adversarial. It's just talking about let's have some red lines around what kind of adversarial relationship we can have, and that means that that's going to lead to further chronic underperformance in the global trade scene. So that's the weekend we're coming out of. Going into this week, I think markets are really going to be closely watching US CPI data that's coming out. And then they're also at the end of the week going to watch consumer sentiments and the inflation expectations. And these two could temper one another, possibly. For the CPI, I think the disinflation trend will continue. So just be aware that some may want to sell off the dollar, may want to bet on a on a Fed pivot just because it's running on the back of softer NFP data. But the warning is the Fed is watching the really inside sticky part. So the Fed's sensitivity to disinflation is really not there. The bar is really high. So that's something we just need to keep in mind. Apart from that, this week we also have the Bank of Korea meeting. They are widely expected to stay on hold, but again, their calculus is quite complex. They can move one way or the other, and so it's worth watching what they're saying here, and also what they may indicate about the kind of recovery they're seeing in their domestic economy, as well as the export sector, giving the slight lead that Korean exports tend to have. So those will be the interesting things to watch for the weekend. We also watch things like Singapore's GDP coming out. There will be that big question around, is it or is it not technical recession? I think that's missing the forest for the trees, because already it's in a manufacturing recession. But if it is a technical recession, what's notable is this would be the first manufacturing-led technical recession since the GFC, and it can spell further weakness in the region for a
That's an
while.
interesting.
Singapore
That's
being a
an
barometer, because the last technical recession and the last recession, COVID, was entirely services driven. It wasn't driven by manufacturing. What's also interesting is that we've had quite a few manufacturing downturns along the way after GFC, but those have not led to a recession or a downturn in the wider economy. So this is why it's worth watching.
On that note, Vishnu, thank you very much for your insights. Thanks for coming on the show.
My pleasure as always, Brian. Thanks for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. The show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.